Tokyo, July 22, 2025. In a sharp and confident move on Monday morning, the Nikkei stock average surged more than 400 yen in the first round of trading following Sunday's House of Councillors election, reclaiming the symbolic 40,000 yen threshold for the first time in over 2 weeks. The recovery was driven by investor relief as the election results aligned closely with market expectations, with no major political surprises or upheavals in the power structure. As of 9:30 a.m. JST, the Nikkei 225 index had jumped 412.78 points from Friday's close, reaching 40,108 yen and 65 sen. The broader Topix index also showed gains, climbing 1.1% to reach 2,875.49. Calm after the vote. Political stability boosts market confidence. Market analysts widely attribute Monday's rally to the relief effect, following an uneventful election in which the ruling coalition, led by the Liberal Democratic Party (LDP), managed to retain a stable number of seats despite some regional losses. Though the LDP didn't significantly increase its power, the lack of a major defeat or coalition breakdown gave investors confidence that fiscal and monetary policies will remain consistent in the coming months. The biggest risk was political instability. That didn't materialize, said Hiroshi Ueda, senior strategist at Nomura Securities. Now that the results are in line with expectations, investors feel more comfortable reinvesting into the market. This election had been closely watched not just for its impact on policy direction but also for its symbolic weight, occurring amid economic uncertainty, rising household costs, and mounting pressure on Prime Minister Shiro Tazaki's government. Focus returns to fundamentals, yen weakness, BOJ policy, and global demand. Beyond the election, underlying market fundamentals also supported the rally. The yen remained weak against the US dollar, hovering around the 148 yen mark, a level that boosts Japanese exporters by making their products more competitive overseas. This has been a consistent driver of corporate earnings in sectors such as automobiles, electronics, and manufacturing. Additionally, investors have begun speculating that the Bank of Japan will maintain its ultra-loose monetary policy at its upcoming meeting later this month, especially after recent data showed inflation slowing modestly. That expectation helps keep borrowing costs low, encouraging corporate spending and equity investment. Today's rally is part of a larger story, said Mayumi Tanaka, chief economist at Daiwa Research Institute. It's not just politics. Investors are beginning to position themselves for a BOJ that stays dovish and a global economy that might avoid a hard landing. Exporters lead the charge. Automakers, tech firms among top gainers. Automakers and electronics manufacturers were among the biggest winners in early trading. Toyota Motor Corp. rose by 2.8%, Sony Group gained 3.1%, and chipmaker Tokyo Electron surged 4.2%. These sectors benefit directly from both a weak yen and investor optimism over stable government policies. This is a sweet spot for big Japanese exporters, noted Ken Shimizu, head of Asia Equities at UBS Securities. You've got a favorable exchange rate, political clarity, and still strong demand from the US and parts of Southeast Asia. Banks and real estate companies also saw moderate gains, as expectations grow that Japan's economic growth will remain steady, albeit modest. Retail and logistics stocks also edged higher, encouraged by signs of consumer resilience even amid inflationary pressures. Overseas investors return as political risk fades. Another key factor behind the morning surge was the re-entry of foreign institutional investors who had been holding back pending the election outcome. Market data shows that foreign buying had tapered off last week due to pre-election uncertainty and worries over a potential backlash against the Tazaki administration. With those concerns now largely behind them, overseas investors returned in force, helping to propel the Nikkei back above the psychological 40,000 yen barrier, a level considered a sign of strength and confidence in Japan's economic outlook. Foreign funds were watching the political landscape closely. They're relieved that there were no surprises and that the LDP is still in a position to pass legislation with some negotiation, said Arisa Kobayashi, political economist at J.P. Morgan, Japan. Unanswered questions remain. Can Tazaki regain public trust? Despite the positive market response, the election results also underscored a sense of discontent among the public. Voter turnout rose sharply to 58.5%, with many citizens citing concerns about rising living costs, declining social security, and a perceived disconnect between the government and everyday struggles. Prime Minister Tazaki, who has faced internal criticism from within his own party, vowed to listen to the voices of the people, and hinted at a cabinet reshuffle to bring in fresh perspectives. Analysts say that whether this translates into effective policy action will determine how sustainable today's market optimism really is. The market may be calm now, but it's only a matter of time before politics comes back into the spotlight, warned Professor Koji Yamaguchi of the University of Tokyo. If reforms don't materialize or if Tazaki fails to rebuild trust, the political risk could return. Looking ahead. Markets to monitor earnings, BOJ, and global cues. Investors are now expected to shift focus toward corporate earnings reports due later this week, as well as macroeconomic indicators including consumer spending and industrial production. The Bank of Japan's policy meeting at the end of the month will also be a major driver of sentiment. We've cleared the election hurdle, said Miki Hayashi, a fund manager at Sumitomo Mitsui Trust Asset Management. But now we need to see if the fundamentals, corporate profits, inflation control, and household spending, can keep the market buoyant. While Monday's rally is a positive signal, most analysts caution against overexuberance, noting that geopolitical tensions, possible trade frictions, and global interest rate moves could still cause turbulence. Conclusion. Confidence, but cautious optimism. In conclusion, the Nikkei's surge above 40,000 yen following the House of Councillors election underscores the Japanese market's deep appetite for political stability and policy continuity. The ruling coalition's ability to avoid a disastrous defeat has temporarily reassured investors, paving the way for renewed capital inflows and market activity. Still, challenges remain, both politically and economically. As Prime Minister Tazaki begins the difficult task of reshaping his leadership and addressing public dissatisfaction, the markets will be watching closely, not just for headlines, but for meaningful reform and consistent economic signals. Until then, today's rally offers a welcome breath of optimism, and a glimpse of the potential that steady governance can unlock in Japan's dynamic financial landscape.